Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Friday was an interesting display of bullishness as the market found the support level again for the Australian dollar at 62.80 and rebounded and posted an intraday high of 63.67. In light of the rebound from 62.80, I still feel the market is destined to challenge this topside level around 64 cents where the 60-day moving average is and reassess from there. In economics, the US Federal Reserve's preferred inflation as a measure by the change in core personal consumption expenditure, or the PCE price index, which excludes the volatile food and energy categories, showed prices rose by 0.3% in September and 3.7% from the prior year, according to data released by the US Bureau of Economic Analysis. From there, the market is expecting to see further closeness to the upcoming data this week, which will be the Fed rate decision with no expected rate hike. And also we get this week the non-farm payrolls, which anticipates a job added of around 182,000, where previously it was 336. Moving on to the euro, the market still maintains above this trend line. And while we continue to see rejections, further could see a rise back towards 107. Overall, though, I feel the market is somewhat bullish, and therefore I'm holding the view up towards the region of 107 and maybe extending on towards 109. As the dollar index, which measures the greenback strength against a basket of 6 major currencies, finished on Friday around 106.40. Having taken the challenge above 150, there may or could have been an intervention from the Bank of Japan as the market plummeted to the lows around 149.5 after reaching a high around 150.40. In light of the pattern, the market has or appears to have broken down and likely to see further risk to the downside, but we do need to see a break of the level of 148.75 to expose a region of 147 to 144. Sterling still somewhat lackluster and still struggling to recover from the lows of 120.20, but I feel overall we could see a rise up towards 122 where the downtrend is and reassess. Finishing off with gold, the market still maintains a very strong bias as it breaks above 2000 and still holds around the level of 2012 to maybe extend into 2026. We are extremely overbought, so it's likely to be a rough ride, but I still feel overall the market is somewhat toppy and eventually we'll see a pullback towards the support level seen around 1987. Finishing off with oil, the market is still holding above that key level of $82 a barrel and somewhat showing a possible bias to the upside for the start of this week. Therefore, we'll see a move up towards the region of 85 and maybe extended to $87 a barrel. Well, that's a wrap. Thank you very much for joining me. And as always, look out for the intraday report. Hope you enjoy the great start to the new week.